Consent. Stuart, how are you, buddy? Good to see you. All right, guys. So I wanted to talk to you. We're going to start running some pop-up calls, probably fortnightly. There's enough calls on through the week, and I don't want to, you guys have got a lot of study, a lot of education to get through. So we don't want to detract from that, but also we just want to bring in these pop-up calls on, a lot of different various subjects. Anything from, I'm more of a whack-off supply and demand style trader. I trade a little bit differently from Jenna. Woo! If we can just mute ourselves when we come on, that would be me. I might just go mute all so then you guys can't. Okay, there we go. So pop-up calls. I'm going to get some of our advanced traders come in and do some other pop-up calls where it might also be a lot more relatable as well. We do try and be relatable for everyone. But basically, these little pop-up calls are going to be all things, market basics, market structure, all about pricing, premium versus discount, pricing, supply and demand, which is my kind of forte, targeted and protected highs and lows, liquidity, inducement, execution, trade management, all of it. Okay, all of it. So we've got, we're also going to be doing a lot more Tradehouse collaborations. So we're going to be getting, Rock, Siva, Cash as well, to do some calls as well. And we're going to be doing a lot more private, one-on-one or smaller group calls as well, with those traders as well. Just because a lot of you are kind of at the same spot in your journey and some of you are a lot further on, etc. So we want to make it so you all get a bit of everything. Jenna and I are only two people. And as the community grows, we really want you guys to step up and, run little calls and stuff like that. So the floor, I was going to say the floor is your oyster, but that is not the right saying. The world is your oyster with this. If trading is something you want to be running calls, please just reach out to me because that would, mean a lot of things to me as well. Now, trading journals. Okay. Now I know, what am I doing? Okay. So we want to basically, I know you guys, most of you are set up. Okay. So if you guys go into Discord, all right, and you have a look in the beginners channel, okay, in the beginners channel, you will see a recording that I've put in there that basically talks about how to set up Notion, which is this, okay? Everyone has a different template and that's okay. It's basically you just need to make it as user-friendly for you so that you will get in the habit of doing it every single day. This is more of a demo register. So this is Tom's, and as he, I won't move it because I don't want to fuck his journal. As his trades go along, he just moves them. There's a whole heap of them. Now, the one thing I need to ask, see how we've got Tradehouse Australia, trading. I don't know who you are. So whoever that is, Tradehouse Australia, I can't give you anyone feedback with those names because I just don't know who you are. So just make it your name, pretty please. Now I'm just going to pull up Vicky's. Don't shit the bed, Vicky. But Vicky has got a really good, she's got a template here called Bounce Back Application. Okay, so as you start going through the beginners channel, you would have downloaded that first PDF document, the Tradehouse Oz step by step. And then you've got down the bottom, you'll see a checklist. Now that checklist is super important that you were going along there and you're ticking it off. I just made it just recently because it is in the video I created, but I decided to make a little document instead. And tick that off. It's going to, one, keep you accountable, keep you on track to make sure that you know everything that you're doing. But, this is Vicky's, as she's going through bounce back, this is her phase one stuff. So she's got institutional candle charts, structure, liquidity, imbalance, like whack off, right? So if this is phase 1, I'm sure she'll make a phase 2 and a phase 3 one as she goes through it. But this is super important that you are doing this. If you're not applying, then there's really no point watching Bounce Back, because you're going to get confused, you're going to get overwhelmed, and you're going to wonder what the hell's going on. So keep in mind with Bounce Back that it is just subject, 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 subject. And if you follow our blueprint, follow that checklist, you will understand everything. You will be on top of it. You will have it all come together. But if you're going through step 1 and Bounce Back and you're like, oh my gosh, this is really overwhelming, that's really normal. And just know that it is just subject, subject, subject. If you need to do Bounce Back 2, 3, 4 times, do that. Okay. I personally did Bounce Back when we first brought this out. All right. And I'm going into my 6th year of trading. Right. So, watching something once, of course, it's going to be overwhelming. Of course, you're going to be doubting yourself. Of course, you're going to have a lot of what the fuck is this moments. You just need to be really patient and trust our process and trust the process that you will understand it, providing you are going through the education and ticking it off and applying it. Okay. Okay. So Michelle has a really good notion as well. Where are you? Where are you? Michelle. Now, Michelle's got a cool little question. So she's got, welcome. So this is the DCX one, which is her checklist. But she's got same deal, liquidity imbalance, mitigation, ICs, structure, right? Perfect. I prefer this setup rather than like this, just so everything is just here. If I'm helping you, it just makes it easier for me. She's also got a questions for SJ tab. Okay. And in here, I can go in there and change everything. She writes out questions. I come in here and answers. She gives me some FYIs. This is what I'm doing. PD stuff, what are you doing for your personal development? I've added that to the checklist as well. Trading journal, all these good things, right? So there's so many that you can do. But yeah, so this is this is a really good program for journaling, right? So when it comes to your journaling, this is really important, okay? And I wanted to preface this call all about the journaling is because this is something that needs to be a habit from day dot of your trading. And if you aren't into the habit right now, you need to get into the habit. Because trading is the journaling is the one thing that makes a trader go from being just a whatever trader to an exceptional trader is the journaling. So we can't skip this bit. So just to recap on that, you'll find the recording for Notion in the beginners channel. Okay, so reasons why journaling is really important. Okay, think about it. A bodybuilder, okay, they have a journal to track their diet, their weight, their strength, their workout program. Okay, who else? A scientist. Okay, they would have a journal to track their latest findings of comets or something like that. I don't know, in their experiments, right? Someone who's a chess master, right? They have a journal to record down their plays and their thought processes while they're playing a game. Okay, and this is the exact same thing for trading. The motto with journaling that you need is what you don't track, you can't measure. Okay, hi Jay, hey, how are you? Good to see you. So what you don't track, you can't measure. So if you come to me and you say, SJ, I'm just not getting this, I'm just not getting that, but then you've got nothing to show me, I can't help you. I absolutely can't help you. Okay, so most traders don't have a trading journal or even know what it is, okay? And maybe you don't know how to create one. That's why we've got that recording. And maybe you are really underestimating the importance of it. But your trading journal is literally like a diary that records all of your trading activity. So if you ask me, a trading journal is literally the deciding factor on whether you are going to be a consistently profitable trader or just another one that gives this a go. Okay, basically that's how this works. So a trading journal is the thing that's going to help you identify all of your strengths and your weaknesses. And I guess the truth of trading is no one is a perfect trader. Okay, it doesn't exist. Instead, the beautiful thing about a trading journal is because it identifies your strengths and your weaknesses, you then will understand how to play to your strengths and how to prevent your weaknesses from jeopardizing your trading success. Okay. So one of the biggest takeaways I had in trading is if you want to be a consistently profitable trader, then you must have a consistent set of actions. Okay. Now, if it doesn't mean if you're consistent in your actions, you're guaranteed to be a successful, profitable trader. Okay. Why? It means, what I mean by that is because you might have an edge in the market and your consistent actions lead to consistent losses, right? But if you have a trading plan, you can look back at your past trades and you can identify which patterns are the ones that's costing you money, which habits are costing you money, and then you can stop doing that. Okay. And it's only through a trading plan, sorry, a trading journal, that's where I can then pick up on your habits, on the things that you're doing consistently. Like we've had many times where a trader has been, one of our students has been stopped out all the time. And then I realized his entries are just off. So then we knew what we needed to work with him on, and that was perfecting entries. Stop losses in the wrong place, taking entries from the wrong, spot. They're going from the wick instead of the body, like just little things like that. When you journal correctly and you have before and after shots, I can see what you're doing, even if you can't. And then I can be like, oh, I notice you do this all the time. Can you explain your thought process with this? And then we can go through it together. Okay. Because when you do that, you can then find your edge in the market, right? And you can then be consistent with your actions. So the way most people create their trading journal is to write down, they just include their entries, their exits, meaning their take profits, what profit they made, or their loss. Okay. However, it's not enough to just have those 4 things, because it doesn't dive deep enough into the factors that affect your trading performance, like your emotions, like your analysis of the markets. Okay. So this is why your trading journal should be split into 3 parts: before, during, and after. Right? So your analysis of the markets and what you're setting up, the setup that you're looking for, right? You might be wondering, what is the purpose of it? Here's the thing: if you don't write down your thoughts or prepare yourself for that, for your trading session, you'll find yourself missing really obvious trade setups, which are obvious in hindsight. Okay, the price will print, and then you'll look back and be like, oh, why the fuck didn't I see that? Well, that's really obvious. Like, I can see why that didn't work out, or anything like that. Okay. So depending on your trading approach, you should do your analysis before the market opens. Okay. This is me. I'm a long-term trader, right? If you are, so you'll see a lot of the Go Live educators will be doing their weekly analysis on a Monday. That's because that's their Sunday. Okay. So for me, a typical trading week for me, I don't even look at the charts until London on Monday. I'm not on during the day, because that's just when the market is opening and it's just finding its feet and finding its groove. So Monday morning opens, I'm not really interested in. I look at the market come, once London's open, and then well and truly into New York. Monday is also not a trading day for me. That's just me to do my weekly outlook and mark up potential setups once the market has opened. Okay, Tuesday, Wednesday, Thursdays are really good, like 5 p.m. Vicky. So Tuesday, Wednesday, Thursdays are really great trading days. Friday, I've taken a couple of good setups, but I typically don't trade Friday either. No other reason than I don't generally need to. Okay, so a trading day for me is, say if I was to come onto the charts Tuesday, I've done my weekly outlook on Monday. Tuesday, I would jump on after New York close. So Tuesday morning, I would jump on and I would have a look what happened throughout London and New York on the previous night. And then I don't even look at the charts until about 3:30, 4 o'clock that same day, to about 2 hours before London open. Okay. Now, the reason I do that is the Aussie session, which is our daytime. Obviously, I'm speaking to Australians right now. That's typically like the liquidity build up the manipulation session, and then London Open is, when, it's one of the most highly traded sessions. So that's where most liquidity and most volatility is. But through the day, and I'll talk about that more so with the trading plan side, but that's typically what a trading week would look like for me, okay? So when it comes to your trading setup, that must be aligned with your trading plan, okay? If you take any step outside of your trading plan, then you're not trading, you're gambling. Okay, so if I hear, so if you've never been on one of my calls, I'm very tough lovey, but it's always from a place of love. So London Open would be the best. Yeah, absolutely. London, New York Australia has the best time zones ever. So London, New York is easily the best. In saying that, I've never traded New York session. I value my sleep. So I'm never up trading through the night. I don't need to be. If my setups don't play out through London, then I just shut the computer down and I get off it. Or my trades are set and they're set and forget. I don't need to look at them. Okay, so now depending on, like I just said, depending on your trading approach, you need to do your analysis before the market opens. Okay, there's no point doing it on the weekend because you already know what price looks like. So you do it once market has opened. Your trading plan, your trading setup needs to be in alignment with your trading plan, which we'll talk about very soon. So what I mean by when I said, if I hear, what I mean is by that, if I know that you're a London, New York trader and you tell me that, I had a quick little cheeky trade at my lunch break, we're not going to do that. We're not doing that. You need to identify your trading session. So if you're trading EUR USD, which is, if you're brand new, that is a pair you should absolutely trade. EUR USD, GBP USD, right? There's 7 majors. You don't need to have all 7. I recommend you have, 1 to 5 on your watch list and just get really fluent with them. There's no need to have a watch list of like fucking 20 pairs. I only trade EUR USD, GBP USD, and gold. I trade 3. They're the only things I trade. And I get really fluent with them, that I understand how they move. And that's the point where you guys want to get with your trades too. I want to be like, so what is, if she trades EJ, I'd be like, what's EJ on the high time frame? And she should be like, it's this, it's this, it's this. Like, you should know your pair so well by not even looking at, having to be on the charts. You should just know it because you always are on that chart. That's how well you got to get to know what it is that you're trading. So here's what you need to record during and after your trade. Okay, so write this down. Relevant metrics and charts of your trade. Okay, so your relevant, let me just pull up TradingView and I'll just write this on here. Okay. So relevant, I can't type either, I can't spell, so don't laugh at me. Relevant metrics. Date you entered your trade, time frame you entered on, setup, trading setup that triggers your entry. Like, what are you looking for? Okay. Markets, what market are you trading? Obviously you're trading Forex. What markets are you Forex? Are you trading? What session are you trading? Is it London? Is it New York? Is it the Asian session? Is it the Aussie session? What is it? What is your lot size of the trade, right? Are you long or are you short? Meaning, are you buying or are you selling? Buying or selling. What is the price you entered from? Price for entry, stop loss, and take profit. Now, the reason I'm saying this thorough is because some of you literally just put a screenshot of before and after and that's it. Not thorough enough. How you do one thing is how you do everything in this, okay? What was your profit loss? What was let's put P&L, profit and loss, okay? And what's your initial risk? Initial risk. Your risk on the trade. on the trade in terms of like your risk to reward as well. That needs to go in there. Initial risk and trade and risk to reward. If you're brand new, you don't know what that is, just take these notes, okay? This will make sense soon. So you need 3 charts in your journal. So the higher time frame, this is the time frame. This is that tells you, this is like the bird's eye view, the big picture, right? So higher time frame, big picture. You then want your entry time frame chart. This is the chart of your trading setup. Okay, so you'll want to state your setup, your mark down your entry level stop loss, obviously using your buy and sell, like your long short positions. Okay, another thing that I would really appreciate in your journals as well, right? I want you to literally draw a little box around the IC that you're waiting for price to come back and react to, because sometimes your long and short positions are way off in the desert, and I'm like, oh, which candle were you waiting for price to like react from? Okay, where did all my writing go? Oh, it's in white. Okay, so what else do we want on there? So your entry time, big high time frame picture, entry time frame. You also want your chart when the trade is finished. So this is the chart after the trade is over. Okay, you want to state the end result of your trade, like what happened. Was it a win? Was it a loss? Okay, so hopefully you've got those noties there. Now, how you then review your trading journal and find your edge in the markets. How do you do that? So this is where the magic really happens with your journals. If you had consistently updated your journal, you can now review it. Okay, but if you've just got, you know, a chart here and a chart there, no aftershots, then it's going to be very difficult to be like, you never want to come onto your journal and basically be like, oh, what was I thinking there? Oh, I think I entered from this time frame. Like if they're the things you're thinking, you're not journaling thoroughly enough. Okay, so how you then review it is, you know, one, you want to, I'm just going to delete this off now. So one, you want to identify patterns that lead to your losses. What are you when I say patterns, I mean like, what are you consistently doing over and over and over again? That identify patterns that lead to your, I'll just say wins. You want to find ways to minimize your losses. You want to find ways to maximize gains. Okay, so what if you're journaling all the time? Okay, another common question is, you know, I'm journaling, I'm doing everything right, I'm following my trading plan. Maybe that's questionable, but you're still losing lots. Okay, so if you're still losing lots, have you actually created a trading plan, right? Do you have screenshots before, during, and after religiously? Okay, are you asking enough questions? They're the 3 things, because if you're journaling enough and you're losing heaps and you're not reviewing, there's your answer there. You're not reviewing, because if you're journaling correctly and you are going through your losses and seeing what you're consistently doing, you should know why you're doing. There's no point taking a loss if you don't understand why. Write that down. I need to know why I'm losing. Okay, so if you're still losing consistently, you know, you've got to ask, why is this happening? Why are you still losing even with a trading journal? So I want, in terms of mindset, this is where the mindset kicks in. Okay, so when it comes to money, think about your money story, right? You often hear things like, you know, money is the root of all evil. Money can't buy happiness. You can't bring money to heaven. Heard that one the other day. But the truth is, money makes you more of who you are. Okay, money is a neutral resource. It is neither good, neither bad. Okay, it amplifies who you are. Okay, it's just an amplifier, but it's still a neutral resource. So when you start experiencing financial problems, money sometimes isn't the problem itself, but your money habits. Okay, so it's the same thing with having a trading journal. when you're experiencing consistent losses, your trading journal itself sometimes isn't the problem, but your trading habits are your problem. Okay? Your trading habits and other factors such as your trading psychology, your risk management, okay, and your trading strategy. So with trading psychology, right, when you're losing consistently despite having, a trading journal, okay, this should be the first thing that you should be tackling is your trading psychology. So having issues with your trading psychology basically means that your actions start being dictated by your emotions. Therefore, the things that would happen, would be bad trading habits. You add to a loss. Okay, you hold on to a big loss. Maybe you move your stop loss in hope that it's going to go off your way. Fucking give me a 1 if you've done that. You take trades too early by breaking your rules. You get a bit of FOMO, fear of missing out. I don't know if it's going to come to my entry, so I'm just going to get in now, right? Give me a 7 if you've done that, right? Over trading by taking trades outside of your rules, right? So you're impatient. Okay, surely the shoe fits for some of those. Okay, now, who's heard the saying, trade like a sniper, not a machine gunner? Okay, I want you guys to start thinking long term and let your edge play out, because we're not here to, a lot of people think trading psychology like motivation, blah blah blah. We're not here to do that. We're here to guide you. Okay, so to dispel most of your bad trading habits that you're producing, the one thing that I suggest you to do is halve your trading account, even if you're on demo. Okay, so for example, let's say you have a $1,000 trading account. If you think that you are consistently producing bad trading habits from that account, then I want you to, open up one with $500. Or if you're on live, I want you to take out half of it. Okay, because reducing your account in half almost immediately reduces your attachment towards money. Okay, so therefore, I suppose, it's that there is then going to help you think objectively by attaching yourself to the process of trading, not the outcome of trading. Okay, so obviously you're not going to go on a little spending spree. Like, just fucking put it aside so then you can, add to your trading account later. This is not the time to buy PlayStation 5, guys. Deposit back into your account as soon as you start showing and gaining a little bit more consistency with your actions. Okay, so like I said, if you're on demo, maybe think about, okay, actually even on demo, if you are not even if you are on demo and you're not live yet, but you're demo trading and you're still losing on your demo, I want you to go live with $50, $100 and test your psychology on a live account, because maybe you're just not taking the demo account seriously. Okay, it's a very real thing as well. So now when it comes to risk management, if you've lost, say, 50% of your trading account, or gained, 50% of your trading account with just say 5 trades, for example, you literally have no risk management in place and you're treating trading like gambling. Okay, now making a lot of money in a few trades only to then give those profits back to the market, I've done it a million times. Okay, because I get too cocky and too overconfident, right? I know how that feels. It's a major problem. And I've met a lot of traders in our group who think that it isn't a problem at all to make a lot of money in a less, on a small account with less trades. Okay, because it's exactly the same thing with your psychology. So if you enjoy hitting like jackpot trades by going all in on one trade, then the casino might be the place for you, not the financial markets, because risk management is everything. If you're in this for the long term and you believe in achieving small losses but consistent gains, then you're going to survive in this. Okay, so when it comes to the risk side of things, risk, any professional trader that I know that trades smart money is not risking more than 0.5% to 2%. Okay, of your account. But here's the main objective with the risk management stuff. When your stop loss gets hit, okay, you're not going to want to lose, I guess, more than 1 to 2% of your account. Okay? That's because you know when to exit when you're wrong. And you know exactly how much you lose before you get into a trade. This is why we have stop losses. At any given point with your trade, you will know how much you will lose every single time, and you will know how much you can gain every single time. There is no guesswork here, right? We're not just coming on one day and going, buy, sell. Like every single thing here is calculated. So when people say trading's really risky, that can be mitigated by risk management practices. But if you're not one using that, then of course it's going to be risky. Okay, of course it is going to be risky. Now, when it comes to your trading strategy, if you're consistently losing, your trading strategy should be the last thing you think about improving when you're losing consistently, okay? Because if you try making tweaks with your trading strategy but not your trading psychology, then it doesn't matter what strategy you've got, nothing can help you there, okay? Because it's a mindset thing. So if your trading psychology and risk management is on point, but you don't have a consistent trading psychology, then you're going to experience, death by 1,000 cuts if you don't have an edge in the market, okay? Now, I'm not going to be going through with you, that can be done on another call, how you can make tweaks and improve your trading strategy using a trading journal, because, that's what I've learned with my trading plan, which is what I'm going to talk about. But your trading psychology and risk management problems is something that your trading journal may not be able to see. You must tackle them before you even think about tackling your trading psychology. Okay, because what people do is they're journaling and they're writing out everything and they're losing, so they think it's their strategy. Don't get me wrong, if you've got a bullshit strategy, then of course fucking change it. We're gonna but we don't have that here. What we do with smart money, that is your edge. That is your edge. Okay? It's just a practice thing. Now, we've got many students. I've got over 400 students. And the difference that I see with traders that mark up and journal, one trade or 10 charts a week, as opposed to, thousands in over a month's period of time, that's the difference. You can't mark up one thing and think, okay, yep, sweet, I've got it, right? This is a forever learning thing. When it comes to market structure, even the best traders who get stopped out on trades, it's usually a structure problem. So don't come in here thinking that you're going to master structure in week one. That's not going to happen. It is a forever learning, evolving thing. Okay, so bottom of the line here, you must have a trading journal because it helps you find your edge. It helps you identify your strengths, your weaknesses, and it helps you improve your trading results. So your trading journal must be split into 3 parts: before, during, and after. Before the trade, this is where you analyze the markets for potential trading setups. During and after, this is where you record, the relevant data that we just spoke about, and then you can review it. And if you do this consistently, your trading results will get better. Okay, and as you get better, you're going to become a profitable trader. Now, I'm going to pull Daniela's up. She probably won't like this, but I'm going to do it anyway. Daniela is probably my favorite journaler, just because anything, I could literally say jump and Danny's like, how fucking high? Where are you? Why can't I see? Here you go. All right, now, when it comes to the journaling, it's the last thing I'm going to say about it, okay? You need to journal your emotional state when you are trading. So in your, before your trade, right, you need to literally say, like, check in with your mental state. How am I physically feeling? How am I emotionally feeling? How am I mentally feeling, right? What is your trading routine? Because trading routines are really important. You don't just finish work all day and then get home and then open up your laptop and chart time. No, okay, you need to do whatever you need to do to ground yourself into, look at this, I'm a trading machine. Yes, you are, right? Like she's a fucking great journaler. So she's very thorough. Look at all of this. Emotional state. was feeling good while marking up this chart, and I felt 10 times better after going and placing this trade on my demo account, only to realize I made up for all the money I'd lost. Boom. Okay. Risk to reward. Easy peasy. Very, very, very thorough. Okay. She has this other really funny one where she's like, I was going calm into this trade. I took a few deep breaths. I was focused. Boom. Okay. And, there was a couple of trades here where she's like, I felt good. Classical mood. Excellent. I love that. There was one where she's like, I rushed this trade because I was going to dinner. And she lost that trade. I was feeling hesitant to trade after taking a week off. Placing this was yeah. So I was really calm, took a few deep breaths, very thorough with the emotional states. Good habits are key to helping you become a better version of yourself. I tried something different and jumped on the charts in the morning instead of the afternoon. This is how you need to journal. This is how thorough you need to journal to understand, what it is that you're doing and experiencing. Because if you don't journal your emotional state and you keep taking hits, if you don't journal that, then you can't be like, what, every single time I've gotten on the charts and I've been in a foul mood, had a fight with the missus, or, I was really hungry, or I was horny, or I was this, I was that. If you don't address all of this stuff, then what you don't track, you can't measure. Okay? What you done. Now, trading plan time. Who here, give me one in the chat if you have a trading plan. Boop, boop, boop. Excellent. 3 people. Okay. So, cool. I know some of you are like fine-tuning and tweaking a trading plan as well. So, without a trading plan, guys, we're literally gambling. Okay. Once again, your trading plan is your Bible. Okay. And this is a forever evolving document. 0.5. Sophie has 11. Excellent. Pick one. I'm joking. Okay, so I guess when you learn how to trade your trading plan, you put your edge in your favor. Okay, and I want you to think of your trading plan as a business plan. If you're going to open up a traditional business, you're not just going to go look at a shop and then put open the next day on without having like a product or opening hours or staff or knowing what the fuck you're selling, are you? So your trading plan is your business plan. That's how I want you to think about this. So a plan is critical. And when trading, there's multiple reasons for having one. And one of the best reasons for having a trading plan is it requires you to educate yourself about the market. Because if you're filling out the entry section, you're like, oh, I don't know where to enter from, then hello, that's what you're going to go study. Okay, so it makes you educate yourself. It makes you gain knowledge on the trading basics. Okay, but the most important part about a trading plan is it helps you take the emotion out of trading. You know exactly what to do, how to do it, and when to do it. And we can't get rid of our emotions because we are human beings. Okay, it's not about being emotionless on the charts. It's learning how to manage them. And having a plan, a trading plan, helps you control them so they aren't destructive. Your emotions and feelings aren't destructive to you on the charts. Okay, so your plan is also the thing that gives you objective feedback on whether what you're doing is working or not. Okay, if there is no plan, it's very hard to determine if what you're doing is profitable, or if it works or not. So you may, if you find yourself asking, why did I take that trade? You're going through your journal and you don't know why you took a trade, it means you're not following your trading plan. With a trading plan, you always know exactly what to look for. Okay, so I'm going to show you mine. This is how simple it is. Simple, does not have to be 20 fucking pages long. Okay, so I understand mine is some words that you don't know. That's okay. I'm more, like I said, I'm more supply and demand. White coffee, right? This is literally what I look for in the higher time frames, smaller time frame. Risk management, trade management. Does not have to be 20 pages long. If you have to read a 20-page novel when you come onto the charts, of course you're not going to read that. Of course you're not going to follow it. But if you have this in a little checklist form, boopity-boppy, tick all these boxes, happy days, you're going to fucking follow it. Okay, you're going to follow it. So keep it simple. Keep your trading plan incredibly simple. So when you're making your trading plan, making decisions alone randomly means there's no research behind what it is that we're doing. You're just trading off an impulse, trading off a whim, trading off my gut feeling. I never want to hear that. I just really felt the market was going to do this. We're not trading like that, guys. Okay? No fucking moon cycles around here. I know that's a thing, but come on. Actually, don't know much of full tide tonight, guys. We're going in. We're not doing that. Okay, so trading like that without a plan is literally like taking a boat out with no paddles and hoping that the fucking current takes you to Hamilton Island when it's like blowing to friggin' Cairns, actually that's the same direction, never mind, but you might get there. Well, from me it is anyway. Antarctica, okay? If you don't know what you're doing, if you don't know where you're going, then it's gambling. There is no defined edge there, which is proven to make a consistent income, right? What you don't track, you can't measure. So what the fuck is a trading plan, guys? Okay, it's basically a basic trading plan is composed of 3 basic sections, just like your trading journal. You've got entry rules, exit rules, and money management. So all 3 aspects of those things work together to create a system that suits your personality, okay? And rules that you can actually stick by. Rules that you continuously or even occasionally break are useless. If you have a trading plan and you don't read it or don't follow it, I want you to rip it up or just delete the file from your computer. There's no point having it if you're not going to follow it, okay? So before I dive into, the entry and the exit and the money management things, I want you to take a personal inventory, of yourself. And, it is upon those decisions of those rules that your trading plan is built. Okay, so first thing you want to ask yourself is, what market am I trading? Our smart money concepts can be applied to any financial market. So if you're into stocks, Forex, crypto, indices. Okay, for me, like I said, I trade EU, GU, soy. I trade coffee. I trade gold. I trade silver, right? I trade like 5 things and that's it. Okay. They're all different markets in their own right. So one trading plan is not going to fit all. Okay, because risk in some is very different from the other. So if you're going to trade, gold and GU, then that's going to be a completely different trading plan in a way, or be a little bit tweaked, because gold is its own beast. Okay, 1 point in gold is, 1 point in like GU is like 10 in gold. So it moves very quickly. Okay, so I don't want you to try and learn all the markets at once. I just want you to pick 2 or 3 currency pairs and just get really good at them. What are your time restrictions? So if you work during the day trading will likely be a bit difficult for you, especially if you've got kids, and a family and stuff like that. It's not impossible. All of you do it. Don't know how you're superhuman. I've got 2 dogs and a cat, and I'm like, God, guys, get out. Mummy's trying to trade. It's literally me. So maybe it's better that you focus on a trading strategy where you can look for trades in the evening, and set and forget. That's how you should do it, in my opinion. Or even be like me and be a swing trader. Whatever it is, decide what you want to do. Decide what type of trader are you. This is a big question you need to answer. What type of trader am I? Okay, so you've got your scalping. We're not really scalpers here. Okay, we're not scalpers. You're using like very low time frame. You're in and out of trades very quickly. Our concepts are more day, intraday to swing, not really scalps. So most traders in here are day intraday, meaning you're in and out of trades within the same session. So if you're trading London, you'll generally be in and out of session, in and out of that trade within, a couple of hours. If you're intraday, same deal, you're going from session to session, so you may hold it for a couple of hours. If you're swing, then you're in it for a couple of hours, a couple of days, a couple of weeks. Okay, now figuring out it actually doesn't really matter what strategy you're doing as long as you've got the psychology right. Okay, so for me, I'm a swing trader, have been for 100 years. The reason I went to a swing trader, right, is because one, my lifestyle changed. I had to become a carer for my mom, but also I was too trigger happy on the smaller time frames, and I could literally scroll my MetaTrader like a fucking diary and be like, look at all the trades I'm in, over leveraging, didn't know what leverage was. So I was just too trigger happy, and I was just in too many trades. Okay. And my lifestyle changed. If you think about Jenna, right, she can't handle being in trades, swing trading. She just likes to be in and out of trades because that suits her psychology and her mindset more. Okay. But if you find yourself constantly babysitting your trade, you're in a trade and you're looking at it every fucking 2 minutes on your MetaTrader, then we need to adjust that. Because if you've got your stop loss and you've got your take profit, then it doesn't matter what your trade has done. Literally piss it off. If you're swing trading, then there's ways to actively manage your trade, which I'll talk about. But if you've got, your, 50 take profit, 30 take profit level, whatever, pips, just let it go. Don't even look at it. What happens with the trade, you're either going to win or lose, and you know what it is going to be either way. Okay? So decide when you are going to look for trades and when you will place trades, and build your plan around that. Right? So remember, Forex, 24-hour day market. I never want to hear there's no time for me to trade. It's so much time. You couldn't get more time, honestly. Unless you want to crypto, then you can go weekend trading. Either way, there is around the clock. There is 4 different trading sessions. There is a session for you, and you can easily find one, right? So once you've figured that out, you'll then know what session you're trading, right? So London, New York, if you trade those sessions, then don't even think about being on the charts and looking for a trade at lunchtime, at lunch, at work, okay? Don't even look at that. None of this, I have breaks at work, I might do some trading. It's not your trading session. It's not your pair. Like, especially if you're trading like GU and you're coming on at like 12 p.m., nothing's going to be there for you. Nothing at all, okay? So if it's out of your trading session time in your trading plan, then you're breaking your trading plan rules and you're not following your plan, right? So then you need to think about your preferred time frame, as in the goal of your preferred time frame, which is what I was just talking about with what type of trader are you. Do you prefer, if you're just trading London, do you prefer to be in and out that night and you can go to bed? If you go to bed at night and you've got a trade open and you can't sleep because you have a trade open, 1, that's a psychology thing you need to work on. 2, you may want to lower your risk, because if that's a risk aversion thing as well. Or 3, maybe that time frame is just not suitable for where you are at in your trading journey right now. So you need to go back to just being like in and out of trades in a couple of hours. Okay. So they all may seem like different questions, but they're all actually linked. So I want you to consider all 3 when deciding what you want to achieve and how long you want your trades to last for. Okay. And what style of trading likely suits your personality best. Okay. So there are some, successful traders that we have a lot in our group. Okay. A lot. They open and close trades within the same day. Swing traders like myself, we're in trades lasting from, London session today till London session tomorrow or longer, right? I'm more of a long-term investor. My longest trade was like 3 months on GU, like I was just in it and I was riding the wave. Some people's psychology can't handle that because of how the market moves. It doesn't just go straight up directly to your target. It comes up, it goes down, it comes up, it goes down. Think about how the market moves with your market structure. If you can't handle that ride of the waves, then swing trading is not for you. Doesn't mean it can't be for you, just means not right now. Okay? Now, what do you want to do? What you want to do and what your personality is may not align. What are you blowing out, Stuart? I'm just looking at Jason, Stuart, and Dana and Vicky. You're my four main people. So yeah, what you want to do and what your personality is may not actually align. Meaning that if you like the idea of swing trading, but you mentally and emotionally can't handle riding all the swings of the market and being in trades for a few days to a few weeks and babysitting your trades every 5 minutes, swing trading isn't for you. Okay. As you get more experienced, it will be. So Mike Miles, another really great example. He trades, his reason for using being in trades for a couple of minutes, like 15 minutes max, I'm pretty sure, is the exact same reason why I'm in trades longer. He doesn't want to be on his computer all day, every day. So he is in and out of trades very quickly. I don't want to be on my computer all day, every day. So I'm in trades for fucking weeks. It's exactly the same. You just need to figure out what best suits you. And also trading gold, because gold, which is primarily what Mike Miles trades, you make a lot of money very quickly or you get humbled very quickly. So no new traders in here is going to touch gold until a little while. Please, please, please. I want you to like trading. Okay, what else can I tell you about trading plans? Rules. Okay, rules. So with all the decisions about how and what you will trade, you can then move on to the rules. So your entry rules. This tells you why, how, where, and when you're going to enter a trade. I'll say that again. Entry, why, how, where, when. Why, how, where, when. Okay. Exit rules determine how, why, where, when. How, why, where, when. This is for profit and loss. Okay. Money management is the most important aspect as it controls your risk. Okay. So if a trade is too risky based on the management rules, you don't take the trade. Okay. It doesn't matter how much you make if you are willing to lose it all on a few trades. Does not matter. Like Daniela's trading journal. It only took her one really good trade to make up from her 2 or 3 other losses that she just took because of risk to reward. Okay, powerful stuff. So in creating a trading plan, it's easiest to start with the money management rules first. So your trading plan is basically built from the ground up based upon your personal financial situation. Okay, so a potentially winning strategy that involves too much risk means the strategy is useless. So what I mean by that is we as smart money traders, for risk to reward, we take no less than a 1 to 3. We take no less than a 1 to 3. What that means is if you're brand new and you don't understand risk to reward, okay, this is what makes smart money and Tradehouse's way of trading the superior way of trading as opposed to any other method, right? Risk to reward. If I take 3 trades with a risk to reward of 1 to 2, even write this out so you see these numbers written down, okay? Write this out with me. If I take 3 trades with a risk to reward of 1 to 2, meaning I am risking 1% of my entire account to potentially gain 2. Okay? If I lose 2 trades and I win 1 trade, you win nothing because -2 + 2 is 0. Okay? Now, if I had a better quality trade, now with Wyckoff, for example, it's very common to have 1 to 10 plus. 1 to 10 is like small for Wyckoff trading. Small. Okay, so for the sake of easy math, right? Because it's Sunday night and fucking 9 o'clock. Let's say again, we take 3 trades and a risk to reward of 1 to 10. I still lose 2 trades. I win 1. Write in the chat what percentage I'm up. I lose 2, I win 1. I'm at a risk to reward of 1 to 10. The answer is 8. I'm up 8%. Well done, Danielle. 8%, because minus 2 plus 10 is 8. So even though I have lost 2 trades and only won, because I was patient, because I was waiting for a good setup, right? A quality trade, I am still up 8% of my account, even though I was a dumb shit and lost 2. I say it all the time. You can be an absolute dickhead in these markets 60% of the time, and you can still make phenomenal money. Excuse me, I'm just having a drink. I drank like 3 liters today, and I literally sweated it all out, I bet you, because it's like heat wave. Okay, so when it comes to your money management rule, we need to think about the trade, right? If it's a really good trade, but it presents too much risk, then our strategy is useless. Strategies must be tailored to an individual's needs and resources, okay? So you need to start out every single trading day by looking at how much capital you have. So you go into MetaTrader and you look at your balance, right? You look at what you've got. No more than 1% of capital should be risked on a single trade. So once our strategy is proven to be profitable, if you want to increase it to 2%, fine. Okay, sometimes I know like Vargas, he'll stack positions and he's got like, 3% risks, but he's like, he knows what he's doing, especially with Wyckoff. So he can afford to, because his strategy is incredibly profitable, right? Which is our strategy, which is the one that you're losing. Not losing, using. The one that you're losing. Yes, I'm fine. Okay, but from my experience, no, she's not. I'm so not fine. I miss you guys. Hate taking December off because it means we don't get to do these very often. Anyway, it's January now, so that's in the past. So for what I've seen in my experience with successful traders who last in this industry, they keep their risk well below 1%. Okay, so say, if a trader if you went for, I think FTMO is like 30 or 25. Okay, let's just say 25. If you went for a, FTMO account, right? $25,000 trading capital, $250 is the maximum risk per trade that you're taking. That's 1%. $500 if you're risking 2%. Everything is math here, guys. Everything's calculated, and there's calculators online that can literally figure it. I literally go, for me to work out what I'm doing every single day, I go to Google and I type the question, what is 1% of blah, 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 and it tells you. That's literally all I do. Keep it simple, right? So with the risk management side of things, as your capital grows, the dollar amount risks on each trade will grow. Okay, so say you're at, 30% now. This is because 1% of 30%, 1% of $30,000 is greater than 1% of $25,000. Yes or yes? So your percentage of risk always stays the same from trade to trade, but as capital grows, the dollar amount you risk becomes more. And that also results in potentially resulting in larger wins and larger gains as well, okay? If capital shrinks, so if your trading capital shrinks because of losses, the dollar amount risks on every single trade will also be smaller. Jason's like, thank you for laughing at all my stupidness. Okay. Your account, as your account goes down because of losses, the dollar amount risk on each trade will also diminish. Okay. Although the percentage of the account at the risk stays the same. Okay. So it is so common for, professional traders to risk less than 1%. Zach McDonald goes like 0.25, even less than that. What we teach you with our smart money is all about being a fucking sniper. Okay. You're a sniper, not a machine gunner. All right. So say you have a 7-figure account holder, they've got $1 million in their account. They may not want or need to risk $10,000, which is 1% of their capital on a trade. Therefore, may only risk $2,000, even on a $1 million account. Okay? So the maximum risk is not a percentage of capital, but it's rather a fixed dollar amount, which is less than 1% of your total capital. Okay, I'm actually including all of this in my ebook. So if that doesn't make sense, it will be written out for you, so you can see it. So what if you're in a trade and you see another one? I see this question asked all the time. Okay, now if you're twin trading can be, it doesn't necessarily have to be the same pair, but say you've got, two take profit levels, and you've got, same entry, same stop loss, but two different target levels. You just halve your lot size. Now, obviously on a 0.01, you can't do that, but anything above that you can. Okay, so let's say you have an account with $700 balance, right? And you're going to risk, what is this? I remember that being spoken about. Yeah, exactly. Yeah, you just halve your lot size. And to do that, when you get up to the demo trading session, guys, we're going to start running MT4 training sessions, so you can understand how to modify your trades, enter, exit, halve lot size, close out half positions, take partials, blah blah blah. So okay, back on track. I digress. If you're in a trade and you want to see another one, the money management section of your trading plan, that all should be in there. That should provide a very detailed description about how you're going to have multiple positions open and how they're managed. No one can tell you what's right or wrong. But yeah, that just needs to be in there as well. So when it comes to, the money management section of your trading plan, to keep it simple, because I know most of you are, does anyone here twin trade? Can someone, if you twin trade, can you write in here if you twin? So as I mentioned the other day in Discord about, you can trade highly correlated pairs. So basically what that means is if there's a pair that moves strongly in the same direction, then you can also look for a position on that. And if you literally just go to Google and type in Forex correlated pairs, and you can see negative correlation. It doesn't always have to be positive. If GU's going up and say fucking GJ's going down or whatever, I don't know if that's a negative correlation, then you can literally buy one and sell one. Okay, but say EU and GU, you're not going to buy one and sell the other. Have fun with that. It's not going to play out for you. So for me, when it comes to twin trading, I will take up to 2 highly correlated positions, risking 1% on each. So like I just said, highly correlated means that they're just 2 assets that move together. I could buy both if my entry rules provided signals to do so, risking 1% on each or 0.5% on each. But I would avoid any other trades that move like the ones I'm trading or don't move. If I'm in it, I'm in it. So no matter how you set up your personal rules, remember the goal is to always limit your risk. So taking a bunch of trades in a highly correlated, environment just because they move the same way isn't what I'm saying. I'm saying it's a way to capitalize on profits if the opportunity presents itself, but you don't just go and over leverage. Okay. As far as how I, calculate my capital, I literally do what I just said on Google. I use my balance for calculating my 1%. So if you've got a $10,000 balance, calculate the 1% based on $10,000. Literally just go to Google and ask what 1% is. Okay. Once you then know your maximum risk per trade, you then develop your entry and exit rules. Entry rules thoroughly outline what has to happen in order for you to enter a position. Okay. What overall market conditions have to be present or not present for you to enter a trade? What are the conditions that you will not enter a trade? Okay, so basically going off our smart money, what are you looking for that presents an entry? If you can't answer this, then you need to go back to the education. So for me, on the higher time frame POIs, I'm looking for higher time frame mitigation. I'm looking for chalk. I'm looking all that break of structure. I'm looking for supply and demand, order flow. right? I'm looking for inducement. I'm looking for premium discounts, premium or discounts. Then on my lower time frame confirmations, I'm looking for liquidation, mitigation, SD and DS flip, right? I've got my risk management rules, where I'm going to take partials, where I'm going to move my stop loss. Am I going to use a trailing stop loss? Okay. I've got my trade management. So with trade management, a really cool thing with all of that as well is, with me being a swing trader, this can even apply to a day trader. Okay. If structure is maintaining, I personally stay in the trade. Okay. If there's no signs of you know, sorry, if I just saw your question. One of the things I've been struggling with is identifying at what stage of my trade to take partials. Okay, cool. I'll answer that question. You know, I personally stay in the trade if the trend is respecting, if structure is respecting. Okay. So all of my entry signals come from actual movements in price. So I am both a day and a swing trader. Keep it simple and easy to remember. You know, it's one of those things where it's like, in the heat of the moment, you have to be able to act on your plan. Okay. If it's too complex, if you have to read, you know, 20 steps for your entry, you might just miss it. Okay. Write in the chat for me, what do we use for take profit levels? What are we using for that? Jason, don't look at me like that. Icy candles is one, yes. Highs or lows, yes. Basically, guys, bang on, Shane. Other forms of liquidity and institutional areas. So icy candles, imbalances, lows, highs, right? Just other areas of liquidity and institutional areas are what we use for take profits. Okay. This is also where we have our stop loss in play. So in your stop loss risk section, this is the bit that outlines how and where a stop loss is placed. Okay. Now, a stop loss if you don't know what that is an order that gets you out of a losing trade. Okay. If a certain price is reached. Okay. Remember, trading is not gambling. In every single trade you are in, you should know how much you could potentially lose and how much you could potentially gain. Stop losses are always used. Okay. Always used. They are there to protect you. So additional things to consider with that is, will you use trailing stops? Meaning, will you move your stop loss as price moves more in your favor? Okay, how are you going to do that? I know MetaTrader 4 desktop, that's an actual setting for trailing stops. Okay. You know, under what conditions will you exit a trade before price reaches your stop loss or profit target? You know, this is what I like to call active trade management. Okay. So my main exit rules are relatively straightforward. I always use a stop loss. And for most of my trades, it's just below a recent swing low when going long, and it's just above a recent swing high when going short. Okay. Or with your IC candle, it's going to be under the wick. I sometimes go body if I'm manually executing my trades. So if you see, sometimes I'll have like my long and short position and you'll see, oh, but why is it at the body? I 9 times out of 10 manually executed my trade. Meaning I literally pulled that trigger. I didn't have a buy limit or a sell limit. Okay. So I do like to incorporate active management into my trading, right? So I set a stop loss and a target on the onset of the trade, but I won't always let the price reach my profit target or my stop loss, being a swing trader, because I'm actively managing my market conditions, because I'm in trades for a longer period of time, right? I may close the trade out early, or I may allow the trade to take more profit. This is also planned and written out in my trading plan, because for me, being a swing trader, if price is still respecting, then I'm going to stay in, right? If my trade is like, you know, 1 to 5 or something like that, I don't give a shit about those ones. Like I've got my stop loss, I've got my TP set, done, dusted, like we're in and out. Okay. So now once you've got those things, now it's time to put it all together and test it out. And so as you begin implementing and practicing your trading plan in your demo, you will likely find that you've overlooked some things. Okay. And your trading plan tells you what to do and what not to do. And situations will arise where you're questioning what should be done, what can I do, why am I doing this, why is this happening? Okay. This occurs when there's holes in your trading plan because you've missed something. So have a look at your trades. The other thing you want to do with your trading journal, while I think about it, is I want you guys to journal. When you are marking up a trade and you've taken a trade, I want you to write in there, I followed my trade plan exactly as it was. And just be honest with yourself. Can you please repeat? I don't know what I said, Ellie. Sorry. That's one of those things that I do if I when I get on a rant, I don't know what I say. Sorry. We are 9 minutes 14 into the call if you want to get that replay. Yeah, so you want to write in your journal and just be really honest. Thanks, Kat. Bye-bye. If you really want to get honest with yourself, you need to write in there, you know what, I actually didn't follow my trade plan this time. Even if the trade worked out, there's nothing worse than winning a trade by breaking your trading plan. Because what is that doing to you psychologically? It's telling you it's okay to not follow your trade plan because I can win trades anyway without it. Okay? So once it's going to take a good month or two testing out your trade plan, a good, 50 to 100 trades, testing out your trade plan before you come to me and say my trading plan doesn't work or I can't trade. Then we can go over it together. So like I just said, if you are constantly assessing and revising it, you're just forever changing it. You're not giving it a chance to do its thing and show you what you know and what you don't know. So let's, a really common question is, if I was to, like, how much money do I need to start, right? Once again, psychological reasons come into play here. Money management reasons come into play here. More money does not mean you're going to make more money, right? If you have $1,000, it doesn't matter. What matters is what you keep, grow, and manage. Okay? So let's say you had $1,000 in your day trading. This is where brokers come into play, right? So if you're trading with $1,000 or less, you want to choose a broker that is a ECN broker. Now, what that means, let's just go to Google together. So I've got this thing about leverage, and I got really shitted off when Australia, oh my God, Australia's ASIC regulations changed their rules and only made Australia's brokers 1 to 30. This is a phenomenal broker, okay? And I was really shitted off that they went to 1 to 30, but 1 to 30 is actually not even that bad, okay? And I'm going to explain why. This is a great broker. This is the one I've been with for 100 years until they changed. And now I've got 3 trading accounts, my funded one, my personal one, Prosperity, and 2 with these guys. So, okay, this is another really good broker. Low spreads. You just have to fund with crypto. Okay. Typical spreads. I'd like to see it a bit less, but it is what it is. Yeah, so it's not a bad broker, but this is the one that you can open with. If you want an Australian regulated one, do this. Your leverage is just 1 to 30. Okay, so I'll explain leverage to you in a second, right? So if you're trading with $1,000 or less, trade through an ECN broker, which is like this one. A broker like this provides, near zero spread and very low commissions. So using an ECN broker means that you can capitalize on, short-term opportunities and still manage your risk really well. Okay, so an ECN broker also allows you to buy and sell directly with the market, which is what you want. Okay, your broker is basically the middleman, and these people, like where they've got like education, don't ever learn from fucking brokers. They want you to lose money. Okay, they make money when you lose. So we're never going to get on a Zoom webinar from IC Markets. Ever. So basically, yeah, that translates to what I'm trying to say there is lower spreads, and you can instantly buy and sell whenever you like. A non-ECN broker, they typically charge a larger spread. Okay, and you'll learn about spreads as you go through the education, and just go to Discord and go to the search bar and type in spreads. There's a whole heap of shit in there. And they, a non-ECN broker, typically they take, larger spreads, and they are acting like the middleman between you and the market. Okay, whereas your ECN broker, that allows you to trade instantly, buy and sell whenever you like. So with a non-ECN, this is where a lot of slippage can happen. Orders may be really slow to fill. There may be some limitations on when you are trying to place trades, meaning they may not let you place a limit or stop orders within a few pips of current price. I know I've seen that a lot of chat in Discord, where like they're trying to enter a trade and they just can't get in. If you're too close to current price, they won't let you, and that's because they want you to use a market order, which then gives them the discretion on what price to give you. Okay, so limit orders, so buy limit, sell stop, buy stop, and market orders, also known as market execution. They're the three main types of orders that you'll use as day traders, okay? And all three of these order types are fine when day trading, even with a non-ECN broker, okay? Although, I can't remember the last time I used a buy stop or a sell stop. It's always been a buy limit or sell limit or a market execution, okay? So as a day trader, one of the most crucial things that comes into play is the spreads, okay? It has to be low if you want to succeed in this, okay? And during active times, such as the London session, such as the New York session, the spreads are typically around, a 0.1 to a 0.5, less than half a pip with an ECM broker. So it's super important we have low spreads. Another crucial element is obviously the order speed as well. So when you hit buy or hit sell, you want to know that you're going to get into your position instantly and there's no lag time. Okay, if there is a time lag, that's a pretty annoying thing, and it can cost us a lot of money in fast moving markets, right? So when dealing with an account that's less than 10,000, less than $1,000, make sure that the broker offers you your micro lot, so 0.01. Some brokers, I'm saying this because there's people from all over countries on this call. Just make sure they offer 0.01 lot sizes, because micro lots give you the ability to really fine tune your position size and risk on a small account, right? So currencies are traded in all different unit sizes. Micro lots are the smallest one. So if you're trading on a $1,000 account, make sure your broker offers a 0.01. Now, like I just said, IC Markets is the preferred broker, but with the ASIC changes, it only allows 1 to 30 leverage. So what leverage is leverage is capital provided by your broker. Margin is your actual capital, okay? So this is actually okay. It's not a big deal. It just means you're using very small lots. Like, I'm pretty sure on a $100 account, you can only use one trade on a 0.01, which is going to take a little bit to compound. But you know what? The more I think about it, and the more conversations I'm having, I'm actually not mad with that, because that there is grooming you to have patience, and it's giving you really good money management and risk management skills straight off the bat, rather than coming in and having like, $10,000 or $5,000 to play with, and you're using, minis or standard lot sizes, and you're just grooming yourself to see big numbers straight away, and it's not always going to be that way. Okay, so I actually don't mind that it's 1 to 30. On Prosperity, you've got, you would set it up with probably, 1 to 100. But you'll never, just because you've got that amount of leverage doesn't mean you're ever going to use that amount of leverage. Let's not get that twisted either. So EU, USD, GBP, USD, they're all really great pairs to trade for a new person. I trade them, and I trade them through London. When it comes to growing your account, so obviously you want some goals included in your trading plan. I know a lot of you guys have like weekly percentage account goals. I think that's killing you. I really do think think that is destroying you psychologically. Like I said on Tuesday's calls, even me as a fund trader, oh my God, I could not talk, a hedge fund trader, I don't get, I get assessed quarterly, 6 monthly, and yearly. I don't get assessed weekly or monthly or daily. Okay. So professional traders, you're putting a lot of pressure on yourself to be hitting these, 20% a week targets. And what if you don't hit that? Okay. What if it gets to Thursday and you're only on like 5%? What are you going to do Friday? Something fucking stupid. That's what you're going to do. You're like, shit, I haven't traded at all this week. You're just putting a lot of pressure on yourself. I think 10 to 15 is a really solid growth per month. 10, 15, 20 if you're adventurous. But if you're doing these 20% a week, I think you're setting yourself up for failure. So I want you to think about that. Okay? I'm not saying it's not possible, because it's definitely possible, as you can see, with risk to reward. But even so, there's days where I'll take one trade because I've actually hit I'm okay with that. Maybe it was like a 1 to 97 risk to reward. I don't need to fucking trade anymore after I've done that for 1 week. No way. Okay. So a couple of questions. What's the best time frame to trade? So all time frames, okay, write this down because I probably won't remember what I'm going to say. All time frames tell a story. Your higher time frame is like the parent, right? And the smaller time frames are the kids, and the kids need to do what mommy and daddy says, right? Hopefully. So I've just noticed, Reese, I used to go on the 1 hour quite a bit, and I'm finding the 1 hour to be quite noisy. So I don't use it that much anymore, especially when looking for like structure. Okay. So for me, my framework analysis is weekly, daily, 4 hourly, 15 minutes. And my execution, meaning I am entering and I'm, manually executing my trades on a 15-minute, 5-minute, 1 minute. Okay, that's if I'm day trading. If I'm swing trading, then I'll happily execute on like a 4 hour. Okay, so your directional bias is all done on a higher time frame. That's where I figure out if we're bearish or if we're bullish, and then I drop down to smaller time frames to execute in that same direction. Okay, so daily gives me that higher time frame perspective. 4 hour time frame gives me the narrative. 15-minute gives me the immediate bias. The immediate bias. Okay, as with anything, find what works for you and stick to it. Fuck what everyone else is doing. It's all about how you see things, what fits you, and what's going to undo confusion for you. 1 minute used to give me hella anxiety up until like about 6 months ago. Now I'm just like, it's just a candle. Nothing to get upset about. Okay? Do what works for you. So, equal high, okay. Oh, these are on private. Okay. Equal lows and equal highs. I know these are areas where liquidity is being created, induced, but how are they expected to play out if we have our bias already set and our AOIs? Oh, I've never seen areas of interest written like that. I like it. I'm going to steal it. What is the expectancy of price? So equal highs, okay, if there is a true distribution, so Wyckoff, distribution play, price will sweep the equal highs, filling and creating liquidity. That's what that'll do. Price will then look to continue to the downside, equal lows. If there is a true accumulation at play, price will then sweep the equal lows, filling and creating liquidity. Price will then continue to the upside. Okay? Okay. Hopefully that makes sense. We'll do that more on a charting call. With the increase in popularity of smart money, will these concepts stop working? Great question. I actually get that question quite a lot. And bottom line is, market thrives on liquidity, whether that is retail or our edge. So often we'll see our POIs swept before heading in our directional bias. Okay, that happens all the time. And that could be seen as market makers trying to take us out. Okay, This is why I prefer confirmation entries, right? That being said, there's so many gurus, there's so many gurus out there on, Forex gurus on Instagram and YouTube, typically teaching retail strategies, okay? And 90% of the 10 million traders worldwide, right, they trade fucking support and resistance flips and EMA crossovers or RSI shit and MACD, GB stuff. I don't know what that stuff is, but I'm just making up letters now. And if that's what they want to do, then that's okay. But there's an incentive to peddle these strategies. Okay, so most people don't last very long in Forex because the first thing they're exposed to are those strategies, are retail based strategies. Okay, that's how I started. I was a support and resistance trendline trader. Okay, that was me. Okay. Smart money is becoming a lot more popular. I def see it when I don't expect it. That's for sure. That's how popular it's becoming. But liquidity is everything. So we're just going to keep following the money. That's all you got to do. Have that in your trading plan. Follow the money. Okay? And adjust when we need to. So guys, that is everything. So start putting together your journals. Start putting together your trading plans. If you'd like me to look over your trading plan, I'm more than happy. Just add it to your Notion. And yeah, guys, make it fun. Okay, I'm putting, for those who are wanting to, dive into the white coffee world, I'm putting these little cheat sheety things together. I'm putting this little thing together where it's like daily bearish, when to look for. After there was another question actually. Chalk. Does anyone here use the word chalk, or is that just, do you guys don't use that? Okay. Chalk is I'm seeing lots of shoulder shrugs. Chalk is well, how do I explain it? It's basically like a break of structure. So chalk is a structure break, so a BOS. However, it's the initial break of structure signifying a change in order flow. Okay, so it's basically, if price is in a downward trend and it's making lower lows and lower highs, after a lower low is formed, we would then expect to see a lower high form for its trend to remain, right? But if price instead breaks a previous lower high and forms a higher high, that would be a chalk, which means change of character, okay? And the character of the trend has then begun to switch from bearish to bullish. So the opposite of that would be if price is in an upward, an uptrend, and it's making higher highs and higher lows, after a higher high is formed, then we would expect to see a higher low if the trend was to remain, right? If price instead breaks the previous high and forms a lower low, there's your chalk. Okay, so basically chalk is a break of structure that switches trend from higher highs to higher lows that are printing on the market, and then a higher low is broken for performing a lower low, right? And then the opposite. So that's basically it. It stands for change of character, and it's the initial break of structure where it's gone from bearish to bullish or bullish to bearish. Hopefully that makes sense. But once again, we can go over that on a charting call when we do another one. So guys, once again, thank you for getting on tonight. I hope you got some value. Send to me your biggest takeaways, some action steps that you plan on doing, and then let's get it. So once again, if you don't know me, you'll get to know me very well. And Tuesday night, our call schedule is in the schedule page on Discord. So make sure you plug into that and just understand when calls are on and when you can jump on them. All right, kidlets, love you lots. Have a beautiful night, and we'll see you on the calls this week.